Shares in Berkeley jumped today after its profits soared, but the leading British housebuilder warned that Brexit concerns are weighing on the UK property market. The FTSE 100 firm revealed pre-tax profits had soared 36% to £533 million in the 6 months to October 31, driven by strong demand in the South East. Revenues meanwhile climbed 14% to £1.6 billion. The firm also sold 2,117 homes, marginally more than last year, but at a much higher average selling price of £719,000 compared to £655,000 in 2016. It also upgraded its pre-tax profit guidance to £3.3 billion from £3 billion. However, despite the strong growth, Berkeley warned that the uncertainty of Brexit still hangs over the property market. The firm added that the 2017-18 full-year results will represent a peak before going back to more normal returns in 2018-19. The company also warned over the future, with Chief Executive Rob Perrins saying there remains good underlying demand for property in London and the South East, but the combination of uncertain UK economic and political outlook and high property taxation continues to mean customers are more circumspect and inevitably purchasing later in the development cycle. Brexit uncertainty and concerns over growth and inflation, coupled with the changes to SDLT, stamp duty, land tax, and mortgage interest deductibility, continue to impact the market. Berkeley flagged the high levels of tax involved in buying a property and welcomed the government's budget pledge to scrap stamp duty for first-time buyers on the first £300,000 of properties worth up to £500,000. There have been contrasting views among builders on the housing sector in recent weeks, although most agree there is a clear slowdown in London, Berkeley's main market. The group put this down to prior changes to stamp duty, adding, other changes to SDLT and mortgage interest deductibility in recent years remain a constraint on transaction levels and social mobility. This is felt most keenly in London, where all housing transactions are down 18% since last year, and new starts remain more than 30% down on 2015. Russ Mould, AJ Bell investment director, said the agreement reached by Prime Minister Theresa May and European Commission President Jean-Claude Juncker may be soothing fears that the UK economy could take a leg down after Brexit, as domestic stocks are charging higher today, including Berkeley and fellow housebuilders Persimmon and Barratt, high street lender Lloyds and real estate play Hammerson. Investors may also not be unduly upset by Berkeley's forecast that pre-tax profits of £1.5 billion will be split 60-40 between this year and next. This is pretty much where the consensus forecast is anyway, so this might not be as dramatic as it first seems, especially as Berkeley has raised its 5-year profit estimate to £3.3 billion from £3 billion. But with analysts forecasting around £840 million in pre-tax income for the year to April, even that upgrade implies a peak in profits from the company. And it is intriguing to see that Berkeley's land bank shrank during the first half to 45,811 plots from 46,351. He added that Berkeley's shares would also draw support from its ongoing cash return program, where the company uses its net cash balance sheet to reward shareholders for their support. The builder plans to return a further 800p a share to investors over the next 4 years. At 200p a year, and that's a return of 4.8% every 12 months, a figure which means the FTSE 100 builder could appeal to income seekers, although it will be interesting to see the mix between dividends and share buybacks. In the first half, Berkeley paid out £70.4 million in dividends and bought back 2.7 million shares at a cost of £92.8 million. Bosses cashed in £88 million of shares in September and October. Founder Tony Pidgley sold 1.5 meters shares to make £55 million, while Perrins sold 1 million shares to make £37 million. Last year, the pair shared £92 million in shares with the rest of the top team in one of the most lucrative days in corporate history. Berkeley shares were up 8% in morning trading,